Have you ever wondered how the wealthiest billionaires in the world, like Elon Musk, manage to pay so little in income tax? Do they really possess some sort of secret or elaborate trick that allows them to avoid taxes? In this video, you'll discover the shocking truth behind the tax optimization strategies used by the super rich. Have you ever felt unfairly burdened by paying a high tax rate while billionaires seem to be exempt? Get ready to be surprised as you understand how they truly manage to game the system, including the creation of charitable institutions to keep more money in their pockets. And how does this affect you? After watching this video, you'll never look at taxes the same way again. Before we delve into why billionaires strive to pay fewer taxes, we must understand the types of taxes that exist. Among the main ones are income tax, property tax, inheritance tax, and consumption tax. Income tax is a direct tax levied on the income and earnings of taxpayers. It is progressive, meaning its rate increases according to income brackets. In this sense, it is expected that the wealthiest individuals pay a higher proportion of their income in income tax than the poorer ones, contributing to a more equitable income redistribution. Property tax, on the other hand, is a direct tax imposed on the ownership of assets, such as real estate and vehicles. It can also be progressive, with variable rates depending on the value of the assets. However, it is more commonly applied to higher value properties, meaning that the wealthiest individuals tend to bear a more significant tax burden in this aspect. Inheritance tax is applied to the transfer of assets and wealth between generations after a person's death. Its rate may vary depending on the value of the transferred assets and the relationship between the donor and the beneficiary. Generally, the wealthiest individuals are affected by this tax as they possess substantial wealth to be transferred. However, I'll show you later how billionaires dodge this tax. Up to this point, it may seem that the wealthiest individuals are paying more. However, it is the consumption tax that deserves special attention when discussing the proportionally heavier tax burden on the poorer individuals. This tax, also known as indirect tax, is levied on the purchase of goods and services by consumers. Unlike direct taxes, it does not take into account the taxpayer's income, being applied equally to everyone. This characteristic makes the consumption tax unequal, as it significantly affects the poorer individuals. This happens because, proportionally, they allocate the majority of their income to the consumption of basic goods and services such as food, housing, and healthcare. For example, if you spend $500 per month on groceries and your salary is $5, 10% of your earnings go to food. But for someone earning $200 per month, the same grocery expense accounts for 0.25% of their salary. Thus, they end up paying a larger share of their income in consumption taxes than the wealthiest individuals, who have a smaller proportion of their income allocated to these essential expenses. If you're enjoying the video, don't forget to subscribe to the channel and buy me a coffee in the first pinned comment. Now that we understand taxes and how they affect us, taxing the ultra-rich tends to be a more plausible logic. However, observing how individuals with colossal fortunes manage to pay a relatively low proportion of taxes compared to the vast majority of the population is noteworthy. This discrepancy is a subject that deserves to be explored meticulously and thoroughly grounded. There are several reasons contributing to the low tax burden of billionaires. First, it's important to consider the complexity of the global tax system, which is permeated by a myriad of laws, regulations, and legal loopholes. Billionaires have access to a network of highly specialized financial advisors who are familiar with these complexities and can find ways to optimize the tax structure, taking advantage of deductions, exemptions, and specific tax benefits. Furthermore, billionaires often have the ability to establish and control companies in different jurisdictions, especially in tax havens. These companies can be used to redirect their income and assets, allowing them to minimize their exposure to higher tax rates. This aggressive tax planning strategy, while legal, can result in a substantially reduced tax burden. Another relevant factor is the political influence exerted by billionaires. Due to their significant financial resources, they often have the ability to make substantial contributions to electoral campaigns and lobbying groups, thereby influencing the formulation of tax policies. This can result in laws and regulations that favor the interests of billionaires, allowing them to protect and increase their fortunes. It's important to note that not all practices used by billionaires to reduce their tax burden are illegal. Often, they are simply taking advantage of opportunities offered by the existing tax system. However, this reality raises questions about the fairness and equity of the system. After all, while billionaires pay a relatively small share of taxes, other sectors of society are burdened with a heavier tax burden. But one question remains: how do they do it? Firstly, there are so-called tax havens that have been the subject of intense discussion and controversy when it comes to wealth management and tax evasion by billionaires. These locations, characterized by their favorable legislation and financial secrecy, offer significant advantages to individuals and companies seeking to maximize profits and minimize tax obligations. Simply put, tax havens are jurisdictions with low tax rates or even the absence of them, as well as offering financial secrecy and little or no cooperation with other countries on tax matters. This means that billionaires can transfer their assets and income to these locations, significantly reducing their tax burden and keeping their financial information protected. These billionaires take advantage of complex strategies to move their money to tax havens, such as creating shell companies, trusts, and offshore funds, which we'll explain in the following. These structures allow them to conceal the true ownership and control of their assets, making it difficult for governments to identify their wealth and consequently impose taxes on them. In addition to tax evasion, tax havens also offer other benefits to billionaires, such as asset protection against lawsuits, preservation of privacy, and facilitation of international financial transactions. These aspects make these locations extremely attractive to those who wish to expand their wealth and avoid scrutiny and tax obligations in their home countries. Offshore companies have become the preferred strategy of billionaires to minimize taxes and optimize their profits. These companies are registered in low-tax jurisdictions or tax havens, where tax rates are extremely low or even non-existent. For instance, Google has most of its operations in the United States. Revenue, employees, assets, everything. But all its documentation is as if it were from the Cayman Islands. This practice allows billionaires to substantially reduce their tax burden and keep their assets protected. One of the main characteristics of offshore companies is their complex and opaque structure. By establishing a company in a tax haven, billionaires can conceal the true ownership and control of assets, making it difficult for tax authorities to track and properly tax these resources. In this way, they can exploit legal loopholes and gaps in tax legislation to avoid paying taxes in their home jurisdictions. Another interesting practice is the role of foundations and charitable institutions in reducing billionaires' taxes has been the subject of intense debate and scrutiny. These organizations are often used by extremely wealthy individuals as a strategy to minimize their tax obligations while purportedly having a positive impact on society through philanthropic actions. A common practice among billionaires is the establishment of foundations and charitable institutions in their own names or in the name of their families. These entities receive significant donations from billionaires, which are then deducted from their taxes, thus reducing their tax burden. These donations, in turn, are directed towards philanthropic projects and charitable activities, which can range from building hospitals and schools to granting scholarships and supporting social causes. While philanthropic actions can have a positive impact on certain communities and causes, it's important to question whether tax reduction is the main motivator behind these donations. Some critics argue that billionaires are using foundations and charitable institutions as a way to exert control over their resources and direct them according to their own interests, rather than contributing to the general welfare of society. Additionally, there are legitimate concerns about the effectiveness and accountability of these organizations. The lack of transparency and accountability regarding the use of donated funds raises questions about the real effectiveness of philanthropic actions and whether they are truly addressing the underlying issues affecting society. In addition to charitable institutions, wealth transfer and inheritance strategies are often used by billionaires to ensure that their fortunes are preserved and passed on to future generations, often without paying significant taxes. In addition to the aforementioned creation of complex structures such as trusts and foundations to transfer their assets without them being considered part of their inheritance, these donations are deductible from the inheritance tax, significantly reducing the tax burden on wealth transfer. But what is the practical consequence of this tax evasion? Global-scale tax evasion by billionaires has devastating impacts on the world economy. By dodging their tax obligations, these extremely wealthy individuals deprive governments of essential resources for investments in infrastructure, health, education, and social programs. This loss of tax revenue weakens the ability of states to promote equitable economic and social development. As billionaires concentrate wealth in tax havens and offshore structures, they fail to contribute their fair share to the financing of public goods. This creates a vicious circle in which reduced revenue limits the availability of resources for strategic investments, compromising sustainable growth. Furthermore, large-scale tax evasion distorts the competitive environment, unfairly benefiting those who manage to evade taxes. Companies and individuals operating within the law end up at a disadvantage, harming productivity and innovation in various sectors. This inequality of conditions prevents the development of a truly free and fair market. Another relevant impact is the capital flight to low-tax jurisdictions. By transferring their assets and investments to tax havens, billionaires drain valuable resources that could be applied productively in their home economies. This decapitalization weakens investment, entrepreneurship, and job creation, with negative repercussions on economic growth. It's important to highlight that billionaires' tax evasion also contributes to the increase in social inequality. By evading their tax obligations, these individuals deprive governments of resources that could be used for income distribution programs, poverty reduction, and expanding access to essential public services. In this way, the gap between the richest and the poorest deepens, undermining efforts to build a more just and equitable society. And since we mentioned that the actions of the ultra-rich not paying taxes increase inequality, what if in a moment of redemption they decided to donate all their money to end world hunger? That's what I'll tell you about in this video that's appearing on the screen. See you later.